You are warned. I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story today, a major bank warns that in 3 days, chaos will hit the markets. We'll show you what they're concerned about, how it can impact the markets, and more importantly, what you can do right now to avoid it. And as you may know, hedge funds look for major dislocations in markets to make big returns. That's called an arbitrage opportunity, and we've got a big one for you with our sponsor for today's show, European Lithium. You can find them on the OTC under the symbol EULIF, and on the ASX under the symbol EUR. This is a huge arbitrage opportunity because there's an asset they own 80% off that's trading at 6 times over their own stock price. We'll show you a setup that could potentially double your return. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now, let's head over to Bloomberg. As we do every Sunday, we like to look at the technicals, momentum, and machine positioning to help you make more money trading, investing. That's what we're all about on the Sunday show. Let's kick this off as hedge funds unload tech stocks after going all in before Nvidia. And this is something that a lot of investors now are piling into this trade. They see the market going up. We know that most retail investors buy the most at the top. Here we are seeing now hedge funds get out of this trade and start to rotate. But is there a reason? Well, it's what's coming in 3 days that perhaps has them spooked. As professional managers offloaded their positions for 4 straight sessions last week, including Thursday, the day after Nvidia posted results. The data suggests traders are booking profits on their tech wagers after a 6-week buying streak and putting that extra cash into less volatile stocks such as consumer staples. Companies that make household products saw the most net buying in 10 weeks. This according to Goldman's prime brokerage. Here you can see that information technology in terms of trading flow is seeing the biggest outflows. Meanwhile, consumer staples is seeing the buying from as this rotation begins by the hedge funds. This has raised some tension about the sustainability of momentum from here now. This according to Peter Callahan, a specialist in tech. And now all of the big tech companies have reported the focus of the next few days will shift to economic data and the timing of interest rate cuts. But it's not just that Goldman's warning about. There's something else that's going to happen in 3 days. And what is that? Well, let's check this out. It is the buybacks. We're going into the blackout window that starts on approximately March 14th and will run all the way through the end of April. Put that on your calendars because who are some of the biggest buyer of stocks? That's tech companies. Look for them to make a final push as they go into their blackout window. And then after that, we start to see the catalyst potentially of the market coming down because we can look at institutional, they're in, retail, they're in. And of course, what is a big catalyst for a stock prices going higher? It's an indiscriminate buyer called, of course, corporate share buybacks. As they go into the blackout, what potential to change now is momentum shifts. And what that brings is machine selling. Here we can see from Goldman that over the next month, this is a big concern. It's not the next week, it's over the month that we see this blackout window. And a flat tape, only 3.8 billion of global equities to sell. But if we see a big down move, look at this, 175 billion of global equities, 35 billion of S&P 500, that would drive the markets down in a material way because as we look at this machine positioning, we see it fairly stretched. So there's not a lot of upside. I mean, they are nearly out at max positions. Downside becomes their key. And what they do is they raise their sell level up higher and higher almost on a daily basis. And if the market goes down, they try to capture those gains and sell as quickly as possible. This is something we encourage you to do as well. We'll show you, of course, our screens here in a minute. Here we look at global CTA positioning. This thing is almost maxed out across the board. And again, that is the current risk of the markets that's starting in 3 days. We get to that blackout window. We see hedge funds unloading those tech companies. And as those tech companies go into blackout and aren't putting support in their stock, well, we could see a massive shift lower. This is one of the reasons why I want to encourage you to increase your stop loss levels. And if you are trading inside something that you can't do that with, such as your 401k, put them down on paper and follow them because we've got some great numbers for you today. Let's take a look at the S&P 500. Momentum still positive, but not only the MACD, the moving average convergence divergence has got a negative cross. Now, that is still yet an early signal, Relative strength indicator is still slowing down, but there's no immediate sign that this is going to change. It may run a few more days, may run another week. We don't know. And one of the ways you can do to still ride this up is just use stop losses. We've got ours set at 503.02. You may remember we use our own tools, our CTA Timer Pro that looks at the machine positioning, but we do something unique. We run a historical overlay. The machines don't do that. So we find when they're on a dislocation, we give you the alerts every day along with the video. And then we have our Momentum Timer Pro that takes all of these signals like the RSI, the MACD, and other technical signals along with a proprietary indicator that nobody else uses. And we smooth that all out. We put in our Momentum Timer Pro report and we give you the signals. This trade back on November 3rd has generated an 18.14% return. Now, many of you asked, do your reports really work? Well, I went through the last 2 weeks of trade and closed out, showed the positions with close on March 8th. And here's what happened. There were 34 trades. I didn't duplicate any. So if in a week there was a secondary signal that brought another trade, I omitted that. Here's the deal. That's 34 trades in 2 weeks. 25% of them, 25 of them were up, 9 of them were down, 74% win rate. And guess what? You can get on that bang. When we give you a whole free month to trade, most of my friends only give you a week to use our reports. We give you a month. Let's check this out on the charts here. And again, links to everything in the description below, along with European Lithium. You want to be sure to check them out on the OTC under the symbol EULIF and on the ASX under symbol EUR, because people want to chase the market up, and you can see it here going higher and higher, and they're hoping that we're going to go on a super long run here and make a ton of money. The reality is the economy in the US and around the world is slowing down. At some point, when everybody's all in, what happens is the markets reverse. And when you have the potential to grab 34 trades over a 2-week period with a 74% win rate, you don't need to chase something. You can go find a better deal. We give you those opportunities. So again, what we're looking for here is to keep our stop loss levels elevated. We're factoring a potential pullback all the way down to 454. Why at that level on SPY? That is broad support. The earliest level of support is right up here around 472, 473. But a big enough pullback, particularly on the backs of those machines shifting, could drive the market down, create another opportunity to get in. In fact, we talk about, controlling risks. It's very critical. We share some tips with our subscribers and our videos we put out, helping you trade our reports. And what do we see? I tell people, use stop losses. And what happened? On QQQ, we got stopped out on March 5th. That's a 19.71% gain. And you might think, well, wait a minute, Steve, there could be a little more juice in that. Yes, there could be. But when I can generate all these trade signals with our reports, I don't need to worry about one. I got more coming because what happened? Momentum still positive. Our size at oversold or overbought territory, not overbought. That means it's at the extreme. MACD's got a negative cross, but with the blackout window coming, why bother playing chase when you can just let your stop losses do the heavy lifting? Downside target, 21-day moving average. Upside target, maybe it goes higher, but you see our machine positioning on the fast algorithm started selling down. We haven't seen that happen on our Momentum Timer Pro just yet. But again, we got stopped out here. That's okay because I got tons of opportunities. We'll show you some more as we go. And again, looking like a potential big pullback coming here. As, of course, corporates go into blackout, your initial level of support is right here around 400. Major support is down here at 384. At the 200-day moving average, could you imagine what an opportunity that would be if there was a big pullback down into support? If you really do think that we are on a cusp of another big bull market, you want to look to buy the dips. That could be a tremendous opportunity for you. All right, let's continue on because we've got the bond market now. This is looking to be a big catalyst. So we, of course, notated this to our subscribers as these signals came through, and we've been following this on our show on Sunday here. What do we see from Nomura? You got to be over 111.42 to buy on the 10-year. Well, guess what? Friday's close. 111.73. So what does that tell you from a machine positioning standpoint? Is there going to be buyers here? That is critical. You want to trade ahead of the machines. That's why we give you the signals. No one else does that. Let's take a look here. Now we traded this one. You remember TLT? We have not used a stop loss. Many of you said over, of course, the last 6 months, you're going to get clobbered on this. Momentum is still positive. Look at this. RSI is at 58 in building. MACD's got a positive cross. Momentum Timer Pro has been oscillating a little bit. bit. 8 consecutive daily buy signals. But look at this. Here's all our purchases. And how do we've done this? We've used, of course, dollar cost averaging. If you find yourself on the wrong side of a trade without a stop loss, just use the signals to add positions. Right now, our cost base is 95.40. We're up 0.35%. Machines looking to buy. And what happened? Our CTA Time Pro, you see it right here. We told you long ahead of the machines when to get in. And in fact, on our Momentum Time Pro, showed you that shift in momentum war before everyone else figured it out. Let's take a look at TLT here. And you can see there is tremendous opportunity. We've got to zoom in a little bit on TLT here to really grasp the full picture. And we talk about this left shoulder over here, this big head, and a potential right shoulder. We talked about potential right shoulder forming. We've got two sides to that. Look at the volume profile here on the last year, offering as a level of support. And sure enough, what we note is that's where most of the shares are traded. Buyers below, sellers above. Sellers are getting worked out here, putting an upside right around this 100 to spot 21 level. A breakout over that takes you up here somewhere around 109. And beautiful, you see the neckline here. This is something on a technical basis you love. We gave you the signals earlier before everyone else. That's the advantage of our reports. Let's talk about gold, because some of you have commented, man, you missed out on gold. It's like, look, here's the deal. I could go chase something that has a triple top that historically says does not trade very well and take a lot of risk. Or I'm going to show you the other way. We did it on the show where you could have made more money instead of worrying about chasing a triple top. But anyways, let's talk about gold. GLD, momentum's positive. This thing's way overbought. Everyone piled in this thing at 83 on the RSI. That is crazy. MACD's got a positive cross. 14 consecutive daily buy signals on Momentum Time Pro. This thing is maxed out on our CTA positioning. Telling you it's at an extreme, maybe reversal likely the case. Of course, what do we see on the charts? We see something that is not worth playing chase on, particularly when there are other opportunities. Let's go out to the 5-year chart. You see it went vertical. This is not normal. Markets don't do that. In fact, when they tend to, they usually end up reversing. So again, if you're on playing chase in GLD, let's talk about a better opportunity. We gave you this one to our subscribers and on the show here. How about GDX? RSI 66. This is nice. It's been building steam. MACD positive cross, telling us momentum indeed positive. Momentum Time Pro, 7 consecutive daily buy signals. We had to buy it open on February 2nd. Another one on February 26th. Why? Because we didn't trigger our stop loss and the signals pulled back, and then it had another one. So we added to the position. Our cost base is now 27.41. We're up 8.414%. That's amazing just using our tools. And again, you get a free month to actually get involved in that. 74% win rate over the last 2 weeks. How can you beat that? Upside target 31.18, downside target 29.04. And we throw in some videos to help you trade this stuff. It's even better. And then you can imagine. Let's take a look here at GDX, seeing right above its 1-year volume profile. This is fantastic, creating support as buyers look to take this higher. Again, you could chase GLD or you could chase this miners. We talked about how it was needed to hold support here. We had our initial buy-in on this here. It pulled back. We did trigger our stop loss levels. We added back as our signals reversed again and said add another position. And here we are looking at moving up here to 31, potentially breaking out from there up to 32, maybe up here into the mid $35 range. That would be a monster of a trade. Let's continue on here. We got another one. See, you don't need to chase certain things, just need to look for opportunities. Palladium, you talk about the power of these reports. You could have paid for a subscription with one trade for a whole year. Some people say they paid for 10 years of subscriptions with one trade. You can do this too. It's not hard. How about this? Momentum's positive on Palladium. We had to buy it open back on February 26th using our tools that we show you here. Our size now at 60. MACD's got a positive cross. That's 16 consecutive daily buy signals of momentum on our report alone. Look at the machine positioning. It's now maxed out, telling us the machines are chasing this higher. We've got our stop loss. I bumped that up because I wanted to hold on to some of those gains. As Friday's close now, 93.96. Next upside target. That's a 200-day moving average. Let's take a look at Palladium here. and see what we've got going on. Upside target up here. Look at this. We got 1 year volume profile sitting right underneath there, right at the 50-day moving average. This is beautiful. You know, we picked this one up, and now we're looking at potential launch up here. If it does, they're going to just keep nudging our stop loss level up. If it breaks out, awesome. If it doesn't, we're gonna make our money and go on to another trade. We've got, like I said, a bunch of them. Let's continue on. How about another trade we gave you right here on the show? DBA. This is agricultural commodities. Momentum positive on this. RSI is at 63. MACD's got a negative cross, no big deal. We've got 36 consecutive daily buy signals. So what do? Yes, move your stop loss level up to 22. Friday's closing at 22.43. We're up 7% on ag commodities. This is going back to December 18th. This has been a wonderful trade now over the last course, almost 90 days. Upside target 23.01. Unchanged. Downside target, that's a 21-day moving average. Let's take a look at agricultural commodities here, and let's see, where is DBA? It's running right there. Let's take a look at a 2-year chart. Why are we not thinking this goes up a whole lot more? Because it's gone up a whole lot. And so what we're looking at, targeting 23.01. If it moves up, what are we going to do? Raise our stop loss level up. It rallied off this low. We picked it up right in here and let it go down a little bit, and boom, rallied it up. We got support underneath. Looking for one final move higher. That is amazing. How about, of course, soybeans? We told you this one to watch this one on the show. If you're a subscriber, that picked up on March 5th. We showed you the signals to you. We made a video for it. We even included that trade, now up 2.59%. We said this could be a big one. That may send DBA even higher. Momentum now positive. RSI is at 55, is building steam quick. MACD, positive cross. Momentum Time Pro, 2 daily buy signals. Upside targets now the 50-day moving average. So what are we doing? We're putting our stop loss level right at our buy point. Try to hold on to keep from losing any money. Friday's closed just 3 cents under the $25 mark. And look at this, machine positioning still very short here. Momentum is still very short, looking to reverse. Let's take a look at soybeans here. And what do you see? Boom, 1 bottom, 2 bottom, now 3, rallying up. This thing's got a lot of potential upside. Usually when it gets down here in this $24 range, kind of in the middle there, can rally potentially up to in the 28. That could be a $4 gain on a $24 ETF. How about that? How about the dollar? Well, things are changing here for the dollar in a material way. Let's take a quick look. Let's skip the dollar. I want to give you another trade. This was Japanese yen, FXY. Momentum's positive. We did this right with our subscribers. I'll show you how easy this is. Momentum Time Pro and CTA triggered the same day on March 1st, put a buy it open. That trade's up 2.29% since March 1st. That is 10 days. Next upside target is a 200. Downside target is a 100. And the machines are still short this, and that is a huge opportunity. Let's take a look real quick. FXY, we picked this one up early. This thing is looking, could get up here to the 66, maybe even into the $70 range, depending on some dollar weakness. But what do you have? A double bottom. We didn't even look at charts. I didn't say look at charts. I said look at our reports. They give you everything you need to know. Check it out. Links in the description below. But more importantly, there is also a link and information to a sponsor where they show European Lithium. We talk about arbitrage opportunities. This is what hedge funds look for to make some outsized returns, and you can do that too. Again, remember, I'll show you there's an asset they own 80% of, and that is trading 6 times over their own stock. This is a huge opportunity over the long term. We'll show you the first potential move to double your money. As European Lithium is listed ASX EUR, FRA under PF8, and on the OTC EULF as a mining exploration development company focusing on its wholly owned Wolfsburg lithium project in Austria. We aim to be the first local lithium supplier in an integrated European battery supply chain, which is a really big deal because they've got historical exploration and development and well located to existing infrastructure and energy sources. They've got well placed to target the largest lithium import markets in the EU. They're wholly owned by European Lithium under stable license and tax regime mapped out by the Austrian Mineral Resources Plan, and they've got land access agreement in place with the landowner. Now let's talk about the European lithium opportunity. And apart from small Iberian production for local ceramics and glass, the EU has no internal lithium supply. So this is a big deal, and there is a push, of course, among regulation that they're going to need a lot of this, as EU is a major importer of lithium, consuming 21% of the global market. In fact, lithium processing sites from imported material in several EU countries. This is huge because a number of lithium battery projects have been announced in Europe, which will considerably increase European lithium demand. And along with that, companies just like European Lithium looking to take advantage of this. Again, on the OTC under symbol EULIF, on the ASX under symbol EUR. Everything in the link and pinned comment below. But bottom line is, they are the closest to largest lithium import market in the EU, with Germany, Belgium, France, Italy, and Spain, and the coming battery projects in Hungary, Germany, Sweden, and the UK. They're all going to need lithium, and they're going to turn to European lithium for that. Now, let's talk about this arbitrage opportunity, because critical metals completes business combination. Remember them. We had them on the show here recently. A business combination between European lithium and Sizzle acquisition to form critical metals completes. That started trading on the NASDAQ on February 28th. And now here is the big deal, because EUR, that is European Lithium, was issued lots of shares in critical metals at completion of the transaction, is now the largest stockholder with 83.03 of issued capital. And based on the closing share price of critical metals, that as of $12.38 on February 29th, their current investment in critical metals is valued at $839 million. Noting that this valuation, of course, is subject to fluctuation of the share price of critical metals. But here's the opportunity, because right now it's trading around 6 cents a share. You notice that buyers have stepped in right at this volume profile line over the last 5 years. Now we'll look at the zoom in here in a moment, but when it breaks out, you can see it easily can double from here. Sometimes you see recently jumped up 32 cents. That could be huge return. We see this as being a big catalyst for European lithium. Here you can see zooming in over the 90 days, as people who knew this merger was coming, it was going to be a big benefit to European lithium, wanted to get in. They started buying shares. Here's your opportunity to buy with the big boys and potentially double plus your money. So again, European lithium on the OTC under symbol EULIF, on the ASX and the symbol EUR. And as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.